Hello everyone, welcome to my channel, and today I'm going to be covering the 3 stocks that I am buying in November. But before you find out the 3 stocks I'm buying, please comment below what stocks you've been buying this November. And before we jump into the video, please remember that this is not financial advice. This is just for information and entertainment purposes only. Your capital is at risk when investing, and please go and do your own research before investing in any stock at all. So the 3 stocks I am investing in November: one is an AI powerhouse, one is a Southeast Asian super app, and the other is a massive defense / aerospace stock. Now you might be able to figure out from them 3 hints what they are, but if we jump into the first one I am buying this month is NBIS Group, ticker NBIS. If you don't know what they are a AI infrastructure company that are massively expanding and constantly building new infrastructure, and they have one of the biggest contracts for AI infrastructure in the world. So if we jump into the reasons why I am buying them, the demand for compute is growing, and this is being shown by other competitors. So whilst NBIS have signed a $17.1 billion deal with Microsoft over 5 years, Iron have signed a $9.7 billion contract with Microsoft, and Cypher Mining have signed a 15-year deal with Amazon for $5.5 billion. So this just shows that the demand for these sort of companies is very high. The company before the Microsoft deal has raised guidance from $750 million in annual recurring revenue to $1 billion. And this is before the Microsoft deal, which is going to contribute $870 million of revenue per quarter. Another bonus of NBIS for me is they own their infrastructure outright. So this creates technical and economical advantages to competitors. They're able to charge a lower price, and because they own it outright, yes, there is a risk in that, but that means they should be able to optimize it and find the best solution in their market for their customers. They also have vertically integrated systems, and normally if a company is vertically integrated, they tend to do a lot better because they have a lot more control over their product and how it should work. And due to this setup, unlike competitors, they get to keep all of their profit margins. So some competitors rent their GPUs or other aspects, and some of their margins go directly to the companies that they're renting from as per the deal. So competitors who rent see less margins due to the amount of parties involved. Plus, if they're renting, they have to pay back on a monthly basis, whereas NBIS own everything outright, so they get to maintain and retain all of those margins. And this stat is needs updating a little bit, but they were looking to increase capacity by 40x by 2027. So they were looking to go from 40 megawatts to 1.6 gigawatts of AI infrastructure and all the energy that it consumes. But obviously they've announced a few more data centers since I've done all of this research. So yeah, they are still looking to expand that massively. On top of this, they hold other investments. So they own Avride and 1010. Avride is autonomous driving, and 1010 is an online bootcamp for people that are trying to get into tech careers. And then they have minority stakes in ClickHouse and Toloka. So really, it's not just NBIS you're buying into. You have 2 other companies that they fully own and 2 other companies that they have a minority stake in, although one of those minority stakes is around 28%. Now there are some risks with NBIS that I am aware of and that you may need to be aware of if you are looking into the stock. It is the execution. If they fall behind on any of their data centers, or if something is not built up to scratch, they could really suffer in delivering to their customers. It is the availability and dilution of the market. A lot of Bitcoin or crypto miners are transitioning into this, and if more keep doing that, the market might become very diluted, but at that point the best company wins. At the minute, they have signed no further hyperscaler contracts like the Microsoft one, so really I think if we see another one of those come in, it will be massive news, and we can sort of breathe a breath of fresh air. And then the other risk is if AI spending decelerates. Obviously right now money is flying all over the wall in relation to AI spending. If this does take a slowdown, we could see a slowdown in NBIS or a stock price decrease because there won't be as much potential for the earnings to keep growing. So they are the risks to be aware of, but overall, them are the reasons why I am buying NBIS. And really quickly, if you are looking for an investing community, if you can scan this QR code here, we have a brilliant investing community that's run by Ben's Finance and Jay's Finance. It is 18 pence a day or £5 a month, but the knowledge that people share in there and the amount of things that get brought to light is worth that 18 pence a day. So if you are interested, scan the QR code and I'll see you in there. So the second stock that I'm buying in November is Grab. If you don't know what Grab are, they are a Southeast Asian super app. So they do ride hailing, they do food deliveries, you can book restaurants through them. You can order food separately and it comes as one and everyone pays for the part. They have financial services. So yeah, it is literally a massive app. They have recently got their earnings, so my reasoning is going to be more focused on the earnings. But if you don't know, they currently haven't had a full year of profit and we are working towards that. But in their recent earnings, revenue was at $837 million, which was up 22% year over year. On-demand GMV was $5.8 billion, which was up 24% year over year. Adjusted EBITDA was up to $136 million, which is up 51% year over year. Adjusted free cash flow sits around $283 million. The loans from the financial services sector was up to $866 million. So this is a 56% increase year over year. And most importantly, monthly users was up to 48 million, and that's transactional users, and that is up 14% year over year. So a very solid earnings for Grab, and they continue to take that step towards a full year of profitability. That is 3 quarters now. One more quarter and we see a full year of profit. On top of this, guidance has been raised slightly. So EBITDA was guided to be $480 million for the financial year. They have boosted it to $500 million. So just a little increase, but very, very nice. The takeaways from their earnings is financial services are growing, and that could become a massive product in the future. Users hit all-time high, and the amount of users equated to 7% of the total Southeast Asian region. On top of that, tourism is also growing quite fast and is one of the fastest growers in the world. And really, when tourists go abroad, they want an easy app that does everything. Honestly, think about it. If you're traveling and you can be told there is one single app that can literally do everything you need and you don't even need to use any other app, you're going to think, brilliant, I'll download that. Why would I use anything else? So yeah, that is brilliant. And then we have seen that the new products are working. So this is Saver Delivery, Group Orders, Grab More, and Gross Selling. And then on top of this, like I've said, I've seen something that was really interesting. They have launched a system where you can book tables at restaurants, which is amazing for tourists. And when you are booking them, you also get access to discounts. So yeah, that's a very interesting feature, and it would be interesting if Uber brought out something like that, because obviously Uber are constantly expanding. Grab for me is one of the most fundamentally sound investments I have seen, and I am very happy to keep on averaging up into Grab, and those are the reasons why I am buying Grab this month. And the third stock that I am buying in November, if you haven't guessed it, is Rolls-Royce. So Rolls-Royce is a massive company. They are huge in the aerospace. They have defense contracts, they have small modular reactors, and really they are one of the biggest companies in the world, and they are quite innovative. They had very strong 2024 performance, which has continued into 25 from what we know so far. They've not given out any warnings or anything, and they have a trading update on the 13th of November, which is in 6 days time. I'll have all eyes on that. They hold strong positions in niche markets, but they are diversifying into new markets, which is mainly the SMR. So that's not a big part of them yet, but for that they are winning quite a lot of government contracts globally, and they are becoming a pioneer in the space of nuclear reactors. Innovations that they have coming out in the future is a next-gen turbofan, which is 25% better fuel efficient and can run on 100% sustainable fuel, which is obviously brilliant because every company is trying to get to net zero. They also have collaborations with NASA and EasyJet for hydrogen combustion technology. Those are two huge companies to be working with, especially NASA. And that just shows that the work they're doing has multiple applications. If the likes of NASA are looking at it, holiday companies, and then it could have also defense capabilities, which is another one of their main markets. So for me, the research and development aligns with the global aim to be decarbonized. I think some countries have it by 2030, some have it by 2045, some have it by 2050, but ultimately the products they're bringing out is going to help the companies achieve this goal. There are some macro trends that Rolls-Royce have benefited from or continue to benefit from. So aviation rebounded from COVID, and really I think some would argue we still haven't seen it go back to the highs it was before COVID, so it's still got some rebounding to go. Defence spending currently is at an all-time high. Obviously there's loads of tension around the world. I feel like in the last 5 years, political tension or military tension around the world has just been up there. You've obviously got Ukraine versus Russia. We've had Israel versus Gaza, which I personally don't think we've seen the end of that. But yeah, it continues. And there's other conflicts going on around the world, but they're the main two that people have heard of. And then obviously, like I've mentioned before, there is a massive push from countries and governments for net zero energy, and the technology that they're bringing out is either going to help companies or countries minimize the carbonization or completely help them eliminate the carbonization. There are some risks and challenges. So aerospace, which is one of the biggest revenue drivers for Rolls-Royce, is cyclical demand. So like COVID, the share price plummeted, nothing was flying, they didn't have anything coming in. So if anything like happens like that again, they could be in trouble, but that is just the nature of the business. They have to go through regulatory hurdles, especially for the nuclear reactor stuff. So yeah, that can slow things down or add extra costs elsewhere that they might not foreshadow. And then if any of the innovation fails, that would be a lot of money pumped into research and development that they can't get a revenue back from. But in conclusion, for me, they have stable finances, some of the best have had 4 years. They are a market leader in nearly all industries that they operate in. They have clear targets for where they want to be in the mid and long term, and that comes from the board. And innovation is key to their business strategy. And that is the 3 stocks that I am investing in November and the reasons why. If you have enjoyed this video, please leave a like, subscribe and comment what you think about my 3 picks. But please remember, this is not financial advice and you need to go away and do your own research. And hopefully I will see you in the next one.